All right, so in today's review, we're going to be breaking down this GBP NCD short play that I had this morning. All right, so first things first, I'm going to navigate over to the free Discord chat. And by the way, there is a link to that free Discord chat in the video description, 100% free. There's no catch. You just click the link, you join the chat, you're in. Then you can share your ideas with us. You can consume all the educational material that I have in here for you every single day that the market is open. I am in here posting price charts that you can learn from. So let's break it down. Let's see what I posted this morning on GBP NCD. Okay, so you can see, and I want to bring to your attention, time stamped 6:26 a.m. Eastern time. All right, no hindsight. Everything is posted beforehand, right? Whether it's a win, whether it's a loss, it's all posted beforehand. Okay. So GBP NCD bias is bearish, and here we have a 4-hour bearish order block. That is right there. See that I have indicated with a blue horizontal line indicating where that 4-hour bearish order block is. That is your higher time frame level. Because remember, for me, 4-hour and up is considered higher time frame levels. 4-hour, daily, weekly, monthly, right? So we have a 4-hour bearish order block right there. Okay, and as I said, our higher time frame point of interest, that's what those stands for. HTF, higher time frame, POI, point of interest. Would like to see price trade up, test that level. And I said also on the 1 hour, we have our fair value gap in there as well. So then if we scroll down, we can see I have a 1 hour chart displayed right here with fair value gap confirmations, right? There's your first one, there's your second one, and then there's your blue horizontal line indicating where that 4-hour level is now just displayed on the 1 hour chart, right? So that was what we were working with. Okay. As I said, well, unfortunately wasn't able to get a full position, which we'll go into here in a second on GBP NCD. And that's what we're doing right now. We're doing that review right now. So daily chart, what are we looking at here? What is the daily chart? Are we operating within a bullish or a bearish market structure? Well, currently we are operating within a bearish market structure on the daily. Right here on this leg lower, see this really strong, explosive move to the downside on the 28th and the 1st of March. Boom, really big move to the downside. Broke that swing low level. Left a fair value gap displacement. That's a displacement to the downside. So that is what we would consider a high probability shift in market structure. Strong close, fair value gap created. Again, I have a video, an entire video on high probability shift in market structure. To search my channel for high probability shift in market structure, you'll see it. Okay, this is the criteria, right? So we have a displacement lower, broke that low, fair value gap created. What does price then do next? Price retraces back up within this new price range. This is a price range. It retraces back up into a, can you fill in the blank? What does it retrace up into? A premium marketplace above 50% equilibrium of that price range. We measured the high to the low. It retraces up into above 50% equilibrium. So that means we entered a premium marketplace. Premium means expensive, discount means cheap, okay? So we retraced up, and then what happened? We topped out. When I say topped out, what do I mean? We put in a swing high level. So we retraced up into a premium, boom. Put in a swing high level, boom. A swing high is simply when we have our highest high in the middle and two lower highs on the left and the right, which we have displayed right here, right? And then this morning we had a move down lower during London session, taking out these sell stops, previous day's lows. So all signs on this daily time frame point to lower. It's bearish, right? Because we're operating at this point, we're operating 100% within a bearish market structure. We're trading with the daily trend, which is bearish, okay? Now on the 4-hour chart, we had this order block right here. This is a higher time frame point of interest that I noted in chat, okay? So I'm going to mark the body. And some people ask me, why do you mark the body? Didn't you used to mark the candles? I did used to mark the candles, but I do the body now because there's just so much more respect for that area. And it makes sense because that's where the bulk of the volume is. Okay, the bulk of the volume is in here. So that's where we note it. So we note the body of that candle. That's your 4-hour higher time frame point of interest. That is your bearish order block right there. Okay. And so that was our higher time frame level. Let's go to the 1 hour now. So the 1 hour this morning, we had a confirmed bearish session during London. And what have I told you guys in the past? Whenever you have the influence of London session backing you, it's much higher probability, okay? Remember, all we're doing is we're piggybacking that momentum off of London, okay? And remember everything that I've told you thus far. The fact that we are trading with that higher time frame trend, the fact that we have a larger time frame level, the fact that now we have the influence of London session, okay? We have several things going for us at this moment. And we have our fair value gap confirmation. We have several actually. We have this one right here, which is a very tiny one. And then we have this one right here, which we tapped up into. See that? That's our confirmation. We need that fair value gap confirmation. We got it during the London session on that strong move lower. Or right before London session. Well, no, this one was. This one was right before it. This second leg lower was during London session. And then you can see we came down, we purged these sell stops right here. See this is previous day's lows. We came down, boom, took them out, right? And then what do? We consolidated for a bit after taking out those sell stops. And then into what? Into New York kill zone. We popped up. We popped up and we drew up into that imbalance. Because remember, this area of price action right here was not efficiently delivered, right? So what does price want to do? It wants to efficiently deliver that price action. So this is where I got a partial of my position in on that first pop up into the fair value gap. And I would have got the rest of my position if it drew up into here, into that second one. Okay, so that was why I wasn't able to, that's why I had a smaller win than usual on this play. It's simply because I did not get a full position. It was, I mean, it popped up and boom. So I had my first position right below that fair value gap to account for the spread. So I had my first entry right below the fair value gap. And then I had my second one, which was right below this one. Okay. So then you can see we respected that level. We popped off of it like real aggressively. And then we took out these lows right here. And then we came into 10 o'clock news. So I definitely didn't want to hold past 10 o'clock at that point because there was news coming out. So I just exited and I was content with it. If you enjoyed, make sure you leave a like, you subscribe to the channel. I'll keep it coming.